Hello students, one of the big goals in everyone's money planning is buying a home. It's something most people dream about. When you buy big things like home, it's smart to get loan instead of using all your savings. In India, home loans have some good things like lower interest rates and savings on taxes. When you want a loan, the first thing bank looks at is how good you are with money. One big way they figure this out by using something called as credit score. This score is like a number that shows how good you are at paying back the money you owe to others. If your score is good, the bank not only gives you a loan but also makes interest lower. So it's really important to know what a credit score is, how they figure it out, and what you can do to keep it high. Today we will talk about credit scores and how to keep it high. This way, when you want a loan, it will be easy and simple for you. This slide illustrates how loan applications are handled in India. When you want to get a loan from bank, they check something called as your credit score. This score is like a grade how you are with your money. The bank get this score from place called CIBIL, which stands for Credit Information Bureau of India Limited. CIBIL tells the bank your credit score, which is a number. If your score is good, the bank moves forward with your loan application. They see if you can get the loan and ask for papers to prove the things. But if your credit score isn't very good, the bank might make things a bit harder for you. They could give you a higher interest rate or less money than you wanted. And if your credit score is really very bad, the bank might say no and not give you the loan. So if you want bank to approve your loan application, it's super important to keep your credit score high. This slide shows 4 C's for credit appraisal, means credit checking. They are character, capacity, credit, and collateral. So first is character. This reflects how responsible something is about your paying back what they owe. The second is capacity. Lender assesses if the person can afford loan payment based on their income, stability, and existing financial commitments. The next is credit. Credit reports show if a person has repaid past loans on time, indicating their likelihood to repay the new loan. And the last is collateral. Collateral is lenders check if a person has valuable asset that could be used as a security if they can't repay the loan. So these factors help lenders decide whether they approve the loan in term or not. Now let's understand what mean by credit score. All these 4 factors are considered into a single number called as credit score. Better is the score, better are the chances for loan approval. A higher credit score indicates that you have managed your finances well and have a history of repaying your debt on time. This makes lender more confident in your ability to repay new loans. So the higher your credit score is, the better your chances of getting approved for a loan. A bad credit score could reduce your chances of getting a loan approval. Conversely, if your credit score is low, it suggests that you might have had difficulties repaying debt in past or managing your financial responsibilities. This makes lender hesitant about approving a new loan because of higher risk. So low credit score could limit your chances of getting approved for a loan. So in essence, your credit score is a crucial factor in loan approval. A good score indicates your chances or increases your chances, while poor score can make it harder to get loan you have applied for. Now, who provides the credit score? Credit score is provided by Credit Bureau. Credit Bureau is like a special company that keeps a track of how people handle their money. They focus on the times when people borrow money, like taking loans, using credit cards, or overdrawing the bank accounts. They also pay attention to whether these borrowed amounts are paid back on time. This special company doesn't look just at loans on credit card. They also notice if the people are paying their taxes on time and if they are paying the utility bills when they should. After they gather all this information, they create a number called as credit score. This number shows how trustworthy person is when it comes to paying back the money they have borrowed. So in simple terms, credit bureau collects and looks at information how people use money they have borrowed. They use this information to create a number that shows how reliable someone is with borrowing money. Banks then use this money to decide if they should lend money to that person. So these are the credit bureau operating in India. TransUnion CIBIL Limited is a renowned credit information company that maintains credit information over 1,000 million individuals and businesses worldwide. In India, TransUnion CIBIL is considered as one of the most trusted credit bureaus. So most of the people will ask for the CIBIL score. CIBIL score is provided by TransUnion CIBIL, but there are other credit bureaus also. But most of the financial institution uses CIBIL. They rely on CIBIL. Now, this is more about credit bureaus. Reserve Bank of India gives license to all the credit bureaus. The RBI, which is like a financial supervisor, grants permission to different credit bureaus to operate. These bureaus are like special organizations that keep track how people handle their money and credit. Each credit bureau has its unique algorithm for calculating credit score. Every credit bureau uses this own special way for calculating a credit score. They have their own formula or methods to figure out how reliable someone is with borrowing money and repaying it. Of course, credit bureau using the different methods, so credit score given by them will be different. But don't worry, even though they are not exactly the same, both scores are still considered valid and important for lenders. So banks and NBFC, means non-banking financial companies, regularly send credit information to all credit bureaus. So if you avail loan from ICICI or HDFC or State Bank, Maharashtra Bank, Bank of India, everybody shares the information with the credit bureaus. Bank and other companies that lend money share information about your borrowings and repaying habits with all the credit bureaus. This helps the credit bureau to build an accurate picture of your financial behavior. So 5 factors are considered while calculating the credit score. Credit bureaus look at 5 main things when figuring out your credit score. 4 we have seen, which are assessed by the bank. But apart from that, credit bureaus consider these 5 things to arrive at a credit score. The first is type of credit. They check what kind of loans or credits you have used, like credit cards or mortgages. Then second thing they will check as a credit history and payment history. They look at whatever you have paid back loans on time, or whether you have paid loans back on time or not. Then next is credit exposure. This means how much money you owe compared to how much credit you have available. Okay, this is if your credit card limit is 1 lakh rupees, so they just check how much you have used out of that 1 lakh. The next is age of credit. They see how long you have been using loan. Then the next is credit inquiries. This is about how often you have applied for new loan. So when all these things are combined and analyzed, it helps credit bureaus to create a number that shows how well you manage your credit. So let's see how credit bureau works. Credit bureau gather information about how you use money from different places like banks and lenders. They look at the things like if you have borrowed money before and if you have paid it back on time. They look closely at all this information to figure out how good you are at handling money. They check if you are trustworthy with borrowing and repaying. Then next is making score with all they have learned or with all this information. credit bureau make a simple number called as credit score. This number shows if you are likely to pay back money you have borrowed. Credit bureaus create reports about your money habits and the credit score. When you want to borrow more money, banks and lenders look at these reports to decide if they should lend you the money or not. Now, what credit bureau records? The things credit bureau records are your personal detail. They include information like where you live, your phone number, where you work, and even things like your passport number. These details help credit bureaus to confirm your identity. Credit bureaus keep track of all your credit cards, bank accounts, and any loans you have. They note down which banks or lenders you have dealing with. The next is payment history of existing loans. Payment history of existing loan. Credit bureaus keep up an eye on how well you are doing with repaying your loans and credit card bills. If you pay on time, it's good sign. If you are late, it's recorded also. Then loan inquiries make against your account, whether you ask bank or lender if they had give you a loan. It's like an inquiry. Credit bureau note these down because multiple inquiries within a short time might impact your credit score. Existing and closed loan account. The credit bureau keeps track of loans you have now and ones you had before. This helps them understand your borrowing history. The next very important is defaulted payments. If you don't pay back your credit card bills or utility bills on time, it's called as a defaulting. Credit bureaus keep this information and it could affect your credit score. So credit bureaus gather all these details to create full picture of how you handle your money, repay your loan and use your credit. This information helps banks and lenders decide whether to give you more credit or loan. CIBIL, which stands for Credit Information Bureau Limited, is a prominent credit information provider in India. It's established in 2007 and it gained official recognition from Reserve Bank of India in 2010. CIBIL is a major player in providing credit-related information for various significant sectors, including microfinance institutions, consumers, and commercial entities. So, if you avail micro loans of like 50,000, then CIBIL also provide the information of loan low as 50,000. CIBIL score is a 3-digit number that sums up your credit history, rating, and report. It falls between 300 to 900. The higher your score gets to 900, the stronger your credit rating becomes. This score serves as initial impression for lenders. The higher your score is, the more likely your loan application will be taken seriously and approved. Usually, a score around 700 is seen as good, indicating responsible money management. In short, the CIBIL score is a quick way for lenders to judge how reliable you are with money and credit. So this slide presents the spectrum of CIBIL score and their connection to loan approval chances. If your score is above 800, not only will your loan application will be approved, but you might also receive a lower interest rate. On the flip side, if your CIBIL score is below 600, there is a high likelihood that your loan application could be rejected by the bank. You have a few ways to check your CIBIL score. There are online tools available for free that can give you an idea of your credit score. The official CIBIL website also lets you check your score. But here is one thing: while it's good to know your score, checking it too often isn't a great idea. Every time you check, it leaves a little mark. Checking too often might make lenders think that you really want loan, and that can actually lower your credit score a bit. So while checking your CIBIL score is helpful, it's best not to do it too frequently. So CIBIL provides a credit report. What credit report is? Credit report is like a horoscope of your credit habits. The credit report is split into 6 sections, each serving a specific purpose. The first section is CIBIL score. Okay, that indicates its number, numeric number, which reveals how reliable you are with credit. The second part is your personal information, containing details like your name, birth date, gender, and identification number such as PAN, passport, or voter card. The third part is contact information, encompassing your addresses and phone number. This section can hold up to 4 addresses together. So all your addresses are recorded by CIBIL. Together, this section provides a comprehensive overview of your creditworthiness and personal data in the CIBIL report. In the employment information part, it keeps track of how much money you earn every month or year. It is reported by banks and other financial institutions. Then the account information section lists all the credit related things you have, like credit cards and loans. It tells you which bank you have dealt with and what kind of credit you have used and your payment history. Lastly, the inquiry information part shows that bank checks your credit report because you have applying for a loan. Every time you do this, it is noted down as an inquiry in your credit history report. So this is how credit report looks like and how you can read it. Now here are few tips for increasing your CIBIL score. The first is always pay your bills on time. Delayed bill payment is recorded by CIBIL and can hamper your credit score, ultimately your financial credibility. The second is keep your credit card utilization as low as possible. Higher credit card utilization shows that you tend to spend when you don't have. Don't spend more than 70% of your credit limit. So if your credit card limit is, let's say, 1 lakh, you should spend up to 70,000 only. I would recommend you to spend not more than 50,000 to keep a good credit score. Everybody needs loan, but don't take too many loans. Home loan and car loans are fine, but personal loan and unsecured loan will decrease your credit score. I understand your curiosity about knowing your credit score. It is advisable to check your credit score annually, as frequent inquiries can be interpreted as loan applications by credit bureaus like CIBIL. These inquiries are typically made by financial institutions or lenders. While credit score is not significantly used for average individuals, it's essential to note that when you make an inquiry, it is viewed as if it's from a financial institution for loan purposes. It's noteworthy because individuals seeking loan frequently may face challenges in obtaining new loans. So don't check your CIBIL score too often. See, in your life, many times you're going to need loan for buying a new car, for buying a new loan, maybe for your children's education in India or abroad. So maintaining a good credit score is utmost important for you throughout your life. So think of credit report like a financial horoscope, or what you might call it as a kundali. Just like in astrology, you have some control over how your financial stars align. If you manage your finances well, the stars in your CIBIL report can be in favorable position, leading to a bright financial future. Just as a good horoscope suggests good things ahead, a positive credit report can indicate promising financial journey. So if your credit score is good, it is very much likely that you will get the loan which is required by you, and you will be offered less interest rate than others. So maintaining a good CIBIL score is very, very important. Thank you for your attention. See you in the next lecture. Thank you.